Trump just confirmed it on camera. $1,000 to $1,800 coming to Americans as what he's calling a dividend or distribution from tariff revenue. I watched the interview myself yesterday, and I want you to hear exactly what he said because this is the third time in 9 months he's mentioned direct payments to citizens, and that pattern tells me something is actually moving behind the scenes. I'm David Kent, a retirement tax specialist, and I've spent over 25 years helping Americans retire smarter and keep more of what they've earned. Before I break down who qualifies and when this could realistically happen, comment your age and state below, because I'm genuinely curious who's watching and planning ahead out there. Understanding how these payments work and whether they're taxable could mean keeping hundreds more in your pocket instead of handing it to the IRS. Here's what Trump said in the interview. He was discussing tariff revenue projections of over $1 trillion annually, and then he pivoted. He said we might make a distribution to the people almost like a dividend to the people of America. The host asked how much, and Trump replied, "We're thinking maybe $1,000 to $1,800. Now, whether you call it a stimulus, a rebate, a dividend, the label doesn't matter. What matters is the mechanics and the timeline, because if you're on Social Security or drawing from retirement accounts, how this money arrives and how it's classified for tax purposes changes everything. The tariff revenue numbers are legitimate. In the last 2 months alone, the United States collected $66 billion from tariffs. That's $33 billion monthly, over $1 billion daily. We're projected to eclipse $350 billion in tariff revenue this fiscal year. Sending out $1 to $1,800 to a targeted portion of the population would cost significantly less than that total haul. So the funding mechanism exists. What we don't have yet is the legislative framework. Trump endorsed a $5,000 Doge dividend back in February. In late July, he backed a rebate concept that Senator Josh Hole turned into the American Worker Rebate Act, proposing $600 payments. Now we have this third mention at a higher dollar amount. 3 endorsements in 9 months signals intent, but intent isn't legislation. Let me tell you what probably happens next and why you need to pay attention now instead of waiting. If this moves forward, it will likely be structured as a tax credit or direct payment tied to income thresholds. That means if your modified adjusted gross income exceeds a certain level, you get phased out or disqualified entirely. We saw this exact pattern in every stimulus round from 2020 through 2021. Single filers above $75,000 and joint filers above $150,000 started losing eligibility, and if you were over those caps by enough, you got nothing. The IRS already has your income data from prior year returns, so they don't need you to apply. Payments would be automatic based on your last filed return, but here's the catch. Most retirees don't realize if you took a large IRA distribution last year or converted a chunk to Roth, your modified adjusted gross income might have spiked high enough to disqualify you, even though your normal annual income is modest. I've seen clients take a $60,000 Roth conversion to reduce future required minimum distributions, and suddenly they're over the threshold for credits and benefits they would have otherwise received. That one move cost them stimulus money, increased their Medicare Part B premium through income-related monthly adjustment amounts, and triggered tax on more of their Social Security. It's a cascading effect that most people only discover after the fact when the damage is already done. So if you think a payment like this might be coming in 2026 and you're planning any large distributions or conversions before year-end, you need to model that decision against potential lost benefits. Run your modified adjusted gross income with and without the distribution. See where you land relative to the phase-out ranges from prior stimulus rounds and assume similar thresholds will apply here. If you're borderline, it might make sense to delay that conversion into next year after you've received the payment, assuming the legislation even passes. Now let's talk about politics because that affects timing. Trump mentioned this could be framed as a dividend from tariff revenue, which is a brilliant messaging strategy. Right now, tariffs are unpopular because consumers are paying higher prices on imported goods. But if those tariff dollars get redistributed back to citizens in the form of direct payments, suddenly the narrative flips. People start seeing tariffs as a revenue generator that benefits them personally rather than just a cost increase. It's a way to take an unpopular policy and turn it into something people actively support. Higher tariffs mean more revenue, which means larger distributions. You've just converted political liability into political capital. But here's the reality. We're heading into a midterm election year. These kinds of proposals tend to surface when politicians need voter enthusiasm. Is this genuine policy or is it campaign positioning? Honestly, I don't care, and neither should you. If the money shows up, take it. If it doesn't, you weren't counting on it anyway. What you should care about is being positioned correctly if and when it does happen, so you're not disqualified by an unforced error on your tax return. There's something else happening that almost nobody is connecting to this announcement. Trump also confirmed $10 billion in payments going to farmers as part of tariff relief. That money is already being distributed, so we have proof of concept. The administration is comfortable using tariff revenue to fund direct payments to specific groups. Farmers got theirs. If this dividend proposal moves forward, the infrastructure and precedent are already in place. That makes it more likely to happen than most people think. Let me be direct about who probably qualifies. Based on every prior stimulus structure, you'll need a Social Security number. You'll need to have filed a recent tax return, and you'll need income below the threshold. If you're claimed as a dependent on someone else's return, you're out. If you owe back child support or certain federal debts, your payment could be garnished. If you're receiving Social Security or veterans benefits, you'll likely qualify automatically, even if you don't normally file a return, just like in prior rounds. The IRS will use SSA and VA data to identify recipients. What you need to do right now is make sure your information with the IRS is current. If you moved, update your address. If you change bank accounts, make sure your next refund goes to the correct account. So, the IRS has updated direct deposit information. In 2020 and 2021, millions of people had delays because the IRS had outdated banking details or mailing addresses. Checks got sent to old addresses or deposited into closed accounts, and people waited months for replacements. Don't let that be you. There's also a tax question nobody's asking yet. Will this payment be taxable income? Stimulus payments in 2020 and 2021 were structured as advanced tax credits, which meant they were not taxable. But if this is classified differently, as ordinary income or as a taxable dividend, you could owe tax on it next April. We won't know until the legislation is written, but if you receive $1,500 and it's taxable and you're in the 22% bracket, you just gave back $330 to the IRS. Suddenly, your $500 benefit is worth $170. That's still money in your pocket, but it's not the full amount. And if you spent it all, assuming it was tax-free, you're going to have a surprise bill at filing time. Here's what concerns me most and why this final point matters more than everything else I've told you. If this payment happens and it's tied to your 2025 tax return, but you're also taking required minimum distributions in 2025, you could be in a situation where your RMD pushes your income just high enough to disqualify you from the payment entirely. Let's say you're 74 years old. You have $400,000 in a traditional IRA, and your required minimum distribution for 2025 is roughly $16,000. That RMD is added to your other income. If you also have $20,000 in Social Security, and maybe $10,000 from a pension, you're at $46,000 for a single filer. That's under most thresholds. But if you're married filing jointly and your spouse also has income and an RMD, you could be at $90,000 or $100,000 combined. You're still well below the phase-out ranges from prior rounds. But if they lower the threshold this time, or if you have any additional income events, a stock sale, a bonus, a Roth conversion, you're out. The strategy here is to control your income timing. If you know a payment is potentially coming in 2026 based on your 2025 return, and you have flexibility over when you recognize income, delay everything you can into 2026 after the payment is calculated. Don't sell appreciated stock in 2025 if you can wait. Don't take extra distributions beyond your RMD unless absolutely necessary. Keep your modified adjusted gross income as low as possible for that 1 year to maximize your chance of receiving the full payment. Then in 2026, after the payment hits, You can take those distributions or conversions or sales without affecting your eligibility because it's already been determined. This is not about gaming the system. This is about understanding how the system works and making decisions in the correct sequence. Most people do the opposite. They make financial moves randomly throughout the year without considering how those moves affect eligibility for benefits and credits. And then they wonder why they didn't get the payment or why their Medicare premium went up. Everything is connected. Your tax return is not just a snapshot of last year, it's the data source for dozens of government programs and benefit calculations. Treat it that way. I'll keep tracking this as it develops. If legislation gets introduced, I'll break down the details immediately. For now, make sure your IRS information is current. Model your 2025 income carefully and don't make any large financial moves without considering the timing. If you found this helpful, subscribe so you catch the next update. I'm here to help you keep more of what you've earned.